Welcome back to Fast Money. It was a brutal session on Wall Street today. The Dow having its worst day of the year and crossing below its 200-day moving average for the first time in more than 2 months. Joining us now by phone is Cornerstone Macro Head of Technical Analysis, Carter Worth. So, Carter, now that Dow is below the key level, where do we head next?
Sure. So, I think it's important to note, right, that Dow has spent as much time above as below, in the sense that a moving average is really what is considered an automated trend line. If you're trending, it really matters, right? If you're in a steep uptrend or a steep downtrend. What we know is what's important is that the market has not been trending, right? It's been stalling for the better part of 18 months. And so while we gyrate above and below these key levels, the internals keep slipping. And so by all accounts, one has to say the June lows are in play. That can happen. If you were to go down, for instance, as much on the Dow as you went down today, tomorrow, you're getting into those levels instantaneously. As we stand now, we're not much worse than we were on Monday's low a week ago. And so the initial plunge, that 6% sell-off in about 4 or 5 sessions, and we've been backing and filling, right? We popped yesterday, news, now we've given it back. But the churning, I think, is a normal process for the market as the individual securities continue to weaken. And that's the issue, that trouble like this never comes out of nowhere. It's been brewing. We know that European banks have been making lows for 2 and 3 and 4 years, Japanese banks. We know the internals in the U.S. from industrials to financials. And yet the optics of the S&P was always the illusion, whereas every other aggregate, mid-cap, small-cap, transports, never were confirming, and now it's all coming out in the wash.
Okay, so let's get to levels, Carter, and home in on the S&P 500. You said new lows. You're saying we're going to test December lows, so that would be what, 2347-ish?
So for us to go to the June low, that's 2728. We close at 2840. You can do that in an instant. That would be another 3.8% from here. But ultimately, and the big subject is, if indeed the December lows are in play, right, which is the 2350 plus minus level, this will all come out as being nothing but a bear market rally. We were never in a new bull, and that's what the divergence was always saying.
Carter, thanks for phoning in on a day like today.
You bet. Thanks, guys.